Okay, so today we are starting with adjustments that you've never done before. And these adjustments, the other ones we did, can happen throughout the year as normal transactions also. But the things we do now is adjustments for year end. You will only find them year end. And the first thing we're going to do is depreciation. Now, when I look, I want you to look at the following. You're going to learn new words when we do depreciation. So let me first explain the concept to you. So here's my car. I call my car Daisy. Ne?
Yes.
And she's got little flowers on her because she's my car, and there's my steering wheel, and there's the lights and the aerial, and she's very pretty. Okay, now when I buy Daisy, let's say I buy Daisy the 1st of March 2020, and I buy her for 100,000 rand. That 100,000 rand we call the cost price. In other words, the cost price, and from now on I'm going to write it as CP, ne? Is the original buying price. Okay. Can that change? No, I'm already paid it. The guy can't afterwards think, oh, I should have asked the 110, so not. No, the transaction is done. So if I draw a T for vehicles, I will say, March the 1st, 2020, I bought a vehicle cash or on credit, 100,000. So my vehicles will always be cost price. Okay. Now, where are we now? 2026. So, is this car still worth 100,000?
No.
Why not? It loses value because I'm using it, right? Why? No, the thing is, please listen. A car, vehicles and equipment doesn't go up in value because it loses value. Even though I put a new radio in, you will see if you go to a trader, they've got a special little booklet that shows the value of the car at that stage. Doesn't matter what extra stuff it's got in. Okay. That might have a change on the selling price, but not on the worth of the car. Okay. So, yes?
Like, if you have a certain equipment that every time you use it, like the more you use it, the more it gets better. Does it mean that even the value is going to change?
What kind of equipment is that?
Like, ma'am, there's this other lighting for a camera, that like the more you use it, the more it produces more.
Okay. Okay. So, there's obviously going to be exceptions to the rules. Okay? But the thing is, machinery, which is equipment, and vehicles, their book value goes down. You might still maybe get a price for it more than you paid for it, but in the books, the value is going down. That's a rule. Okay. So the value that's going down, we do it as follows. Let me show you. So for this vehicle, I'm going to open up a thing I call an asset register. So a register is just a book that keeps track. That's it. So most probably these days I'll have a folder on my computer that says vehicles, and every vehicle I own will have its own little file. Okay, and the file will have all the information. It will say purchased, where did I purchase it, at Mr. X, the date of purchase, which is 1st of March 2020. It will have the cost price, which is 100,000. It will have the selling date, the registration number, everything, information about even what color it is, what make it is, all the detail about this vehicle would be in this asset register. And now the asset register is going to have columns. So I'm going to work with financial years. So if I have a financial year, I say to you, my financial year ends 28 February every year. Ne? You guys with me? So, the first time I'm going to calculate the depreciation is going to be 28 February 2021. Can you see? Okay. So now I'm going to say 100,000. Let's say my depreciation is 1,000 rand a year. Then I'm going to say, okay, the depreciation is 1,000. Ne? Now I'm going to have a word that is accumulated depreciation. So let me explain to you. Depreciation is an expense, and it's for the current financial year. Okay? So every year I work out a new depreciation. Now I have another word. Accumulated. What does accumulate mean? Accumulate means I'm gathering. I am now accumulating stationery. I'm accumulating stationery. You get the point. So accumulated depreciation. What does it mean? I'm accumulated depreciation. So this will be depreciation from year 1 plus depreciation from year 2 plus depreciation from year 3 plus, and so it will go on and on and on. So this is, in other words, a summary. Can we stop talking while I speak? So this is, in other words, a summary of all the depreciation from the day that I bought this vehicle. You see? You get it? Okay. So now, can you see this is year 1? So the accumulated is still just 1,000. Right? Now I'm going to get what I call the carry value. Now another name that you might know is the book value. So what is this car worth now? It's no longer worth 100,000. Let's make it 10,000 depreciation. It's now worth 90,000. Does that make sense? So I took the cost, I subtracted the 10, and I say my carry value is 90,000. So if I now go and I sell this car for 92,000, do I make a profit or a loss? You make a profit of 2,000. Can you see that? Okay. Now, the next year would be 28 February 2022. So now let's say the depreciation is again, I say it's every year 10,000. What's the accumulated now? 20,000. And what's the carry value? 80,000. Can you see as the accumulated goes up, the carry value goes down. Let's do one more year. 28 February 23. So it's still 10,000. What's the accumulated now? 30,000. So what's the carry value? 70,000. So let's just quickly go through the words again. Cost price is the original price I paid. Carry value is the current book value. Okay. Depreciation is the amount that I make the value of the asset less with. And it's only for the current financial year. Whereas accumulated depreciation is all the depreciations added through all the years. And for the first time in your life, you're going to learn something new. You're going to learn about a negative asset. So accumulated depreciation is a negative asset. Why? Because it specifically makes the asset's value less. So in your trial balance, it would look like this. You would have vehicles on the debit side, 100,000, and you'll have accumulated depreciation on vehicles at this stage, 30,000. Can you see on the credit side? Because how much is the vehicle actually worth? 70. Ask. No. It's a negative asset. It works with vehicles and it makes the carry value of vehicles less. But I can't write vehicles as 70,000 because I bought it for 100,000 and I already recorded it in my books 2020 when I bought it. So I'm not going to scratch out every year and make it less. Yes. A negative asset is an asset that makes the value of another asset less. Yes. Yes. The carry value actually goes down till 1. Then you don't depreciate. So everything is a profit if I sell it. Yes. Yes. Okay, so it's going to, if I look at the T accounts, once you see the T accounts, you will understand. So in the balance sheet section, please don't talk. I'll have accumulated depreciation on vehicles. It's a B account, right? It's a negative asset. I have depreciation, which is an expense. It's a nominal account. It's an expense. So, year 1, so 2021, I'm going to say my accumulated depreciation on vehicles are going to be credited with 10,000. You see? Okay. What do I do with nominal accounts the end of the year? I close it off to what? To profit and loss. So I'm going to take this to profit and loss. 10,000. You see? It served its purpose. If I do the income statement, what am I going to show in the income statement? What is this? An expense. So in the operating expenses, I'm going to show depreciation 10,000. Okay? What am I going to show in the balance sheet? In the balance sheet, I'm going to show vehicles as 90,000 because it was 100,000, but I depreciated it with 10, so now it's only worth 90. Yes. The 10,000 income statement. You guys get it? So next year, let me show you the next year. Because I think if you see the next year, it will come a little bit clearer. So the next year, I'm going to do the same. I'm going to say my depreciation is 10. Ne? It's 10. So what do I do with depreciation? It's a nominal. So I close it to profit and loss. How much is going to the income statement? 10. Can you see? Only for this year. But how much is my accumulated now? It's now already 20. So in the balance sheet, what's my vehicle going to be shown as? 80. Can you see it accumulates? This one doesn't accumulate. This one is just for the year. This one is for all the years together. Next year, 2022, again, I'm going to say 10,000. 2022, depreciation, 10,000. What's going to go to my income statement? 10,000. Can you see it stays only what I write off this year? But what happens to the accumulated? It gets more. Can you see it's now already 30,000? It keeps getting more and more and more. So now my vehicle in the balance sheet is going to be 70,000. Does that make sense? You start getting it. So let's quickly go through it again. You've got the concept, cost price. So the first concept you need is the concept of cost price. It's the original price of the thing that I bought, and it cannot change. Ne? Right. What's wrong, baby? When I get to it, you'll ask me. Okay. So that's the first term you need to know, cost price. Depreciation is the part that I write off this year. And it's only for this financial year. Ne? It's an expense, so I will show it in the income statement. Accumulated depreciation. I take all the depreciations from my time I bought this vehicle up until now. So it gets more every year with that year's depreciation. So accumulated depreciation is literally depreciation year 1 plus depreciation year 2 plus depreciation year 3 plus depreciation year 4. You see? And it's a tool for me to see how much the value of my asset decrease. Okay. So in the end, if you look here at your notes, you will see here it says, in the end, my cost price, which is the original price I paid, are we still focused? Less the accumulated depreciation gives me the carry value. What is the carry value? It's the book value, it's the current value. Does that make sense? Yes.
When the depreciation, like the number of it, can it change in the new financial year, or does it remain constant with every?
Okay, that's what I'm going to teach you now. There's two methods to calculate. The one method, it stays constant. The other method, it changes. Yeah. I also want to show you this. This is just for interest's sake. So, an income statement. Let's go on tomorrow, okay?